And now to our first conversation. According to a new report by Fitch Solutions, household spending in Nigeria will grow by only 3.5% to $72.3 billion, about 30 trillion naira this year. And also, according to data extracted from the financial statements of some of the largest beverage-making companies in the country that are listed on the NGX, it shows that Nigerians spent over $1 billion on beverages such as alcoholic and non-alcoholic drinks in the first half of 2022. For analysis now, we have Chima Kadike, Senior Consumer Goods Analyst at Vetiva, joining us right there via Zoom. Great to have you on the program.
Good morning. It's good to be here. Thanks for having me.
Morning. So we see that Fitch Solutions, they're giving that projection for household spending, and it's looking at, it's described it as only. How do you see the projection?
Sorry, describe it as what?
They described that projection of only 3.5%. That's what they're expecting for consumer spending. How do you see it?
I'd like to speak more to the trend of growth they are forecasting than speaking specifically to the numbers. So we know that coming from 2020, when the pandemic caused a lot of havoc in the economy in terms of businesses and in terms of consumer spending, there was that disruption. And then 2021 was really consumers just trying to rebound from what had happened in 2021, although we still saw low spending. So overall, I would say that we're coming from a low base. Right now, here in 2022, we're still coming from a low base. And so that is one factor that should support consumer spending in this year. But aside that, we know that consumers are still prioritizing essentials, and more importantly, they're trying to prioritize these products that will fit into their current inflation-beating income levels. With what is happening with inflation, and given that income levels haven't risen by as much, consumers have to be able to adjust their spending to fit with what value is left after inflation's effect. But just as well, producers have also been able to adjust production to bring out new products that can fit or match these new needs of the consumers. So what we're seeing is that a lot of value products have been brought into the market, which are a lot more affordable for consumers. So this has enabled volumes to stay somewhat stable. So based on this, we expect that consumer spending will continue to rebound. As for the numbers, like I said, I'm not going to speak to the specific 3.5% that they've projected, but I agree with them, or I align with them in sense that we expect to see growth. And one more thing, is that this is a pre-election year, so by the end of the year, we should start to see a lot more spending. So that should really prop the growth that has been forecasted.
Interesting. And another interesting part of the report says that Nigerians spent over $1 billion on beverages in the first half of 2022. What does that tell us about the state of the average consumer in Nigeria right now?
To really understand that, I think we should look at the comparable for at least 2019. So if you look at the NBS's report on consumer spending for 2019, it reports that consumers spend, I think, about 1.4 billion naira on beverages as a whole. That's alcoholic and non-alcoholic beverages, and that's for the full year. So looking at what we've seen for the half year, that's around 700 billion naira if we're looking at the parallel market rate, or below that if we're looking at the official market rate. So this is less than, and if we annualize that figure, it will be around 1.4 billion, which is kind of less than the 1.5 billion that we saw in 2019. And then if we add adjust for the fact that we've seen a lot of pricing increases this year, it kind of shows that volumes haven't been as strong as they were in 2019. So it just means that a lot of this growth has come from pricing, and it means that value to the consumer has not really been preserved. So I think what it means for the consumer is that they've not been able to get as much value as they were able to get in 2019 or in 2019 comparable year. And this has been a direct impact of inflation on the consumer.
Quite interesting. I guess the consumer goods companies, most especially the brewery giants, are smiling to the bank at this time, despite reducing purchasing power. But how do the non-alcoholic beverage makers? How do they perform?
I think they did quite well as well. Like you said, you're quite correct. The brewers, the alcohol makers were very posted very impressive results, especially in the half year period. But even if you look at the brewers themselves, some of them or many of them still produce non-alcoholic beverages like malt. And from reports from management, you would hear that that segment pulled a lot of weight in driving revenue growth for the period. So we saw about double-digit volume growth for the malt segment, and this is despite the tax on carbonated drinks that was introduced earlier in the year under the Finance Act. So I think we can say that the non-alcoholic segment has grown or has done well as well. And if we even want to look at the other kinds of players in this segment. So we'll look at the milk and chocolate beverage makers. We'll look at a player like Nestle, for example, and look at the growth in its beverage segment, which was like 6% year on year for the half year. We can also say that they were smiling to the banks as well. But just to note that this has really all been from as a result of increased pricing.
And we saw inflation for July. It came in quite hot, over 19%. And I'm wondering, how is the inflationary environment, shaping consumer spending going forward?
Well, so I remember, as I mentioned earlier, a lot of consumers have tried to tailor their purchases to, be in line with their wallets and what has happened to their wallets due to inflation. So we've seen a lot of downsizing in terms of purchasing. So if you were previously buying premium products, now you want to look towards the middle tier or lower tier of the market for those same types of products. So that's what we've seen so far, and that's one way that inflation has affected the average consumer really.
The administration has voiced concerns of having, revenue problems at this time, and is looking to consumers and services as a target for taxes and tariffs. And I'm wondering, how much can the consumer take at this time?
Well, so for the consumers, I think it would really depend on what the players decide to do. So we know that earlier this year there was a sugar tax that was imposed on carbonated non-alcoholic drinks. In 2017, the excise duty on alcoholic beverages was introduced, and in June this year, another round of excise duty increases have been introduced across beer, wine, I think tobacco as well. So but it's supposed to be phased, over 2022, 2023, and 2024. But I think what would happen is, or what this will depend on is what the players decide to do. So if they decide to absorb this cost um, themselves and not pass this cost to the consumers, then the consumer may be left unharmed, as status quo. But if they decide that they want to preserve their margins, which we may likely see, or try to somewhat maintain their margins, then you would have to pass this increased cost onto the consumers. And what we'll see is an added impact of what inflation has already done to the consumer. So I think consumers would then be worse, would then fare worse in that scenario.
The firms are in it for profit, but what do you think can be done, to, create some kind of buffer for consumers at this time? Are there any options right now? Because I saw on social media yesterday a lady complaining about she was cooking a pot of stew, and she showed that pot of stew cost her about 15,000 naira for just an average pot of stew. What kind of buffers can we expect?
So the problem is that the producers themselves are facing a lot of costs. increases on their own end. So if we look at, for example, flour millers who have to import a lot of wheat, given that we produce about 1% or less than 2% of wheat in Nigeria, and given the Russia-Ukraine crisis that is ongoing, they have to um, deal with these increased costs themselves. So I think that there could be a balance in terms of trying to manage how much of these costs is passed on to consumers, which will then affect their margins. But other than that, I'm not sure that a lot can be done, save for trying to, um, um, promote more the import substitution plan, try to encourage more producers or more manufacturers to use more locally produced goods, which they are trying to do. And so it would then be trying to encourage more locally grown products, going back to the farms, trying to get more wheat to be produced in Nigeria, sugar, for example, and all of that. For those things that can be produced in Nigeria, that's it.
That's looking inward at this time. But what do you see coming for consumer goods stocks listed on the NGX? Yesterday I saw Honeywell Flour, International Breweries. They were on the top gainers yesterday. But what are you seeing coming for those stocks?
So I think this will. I'd like to split them into food, brewers, HPC, and sugar players. So for the food segment, there's a lot of pressure in terms of cost. With the onset of the Russia-Ukraine crisis, global wheat supply had declined, which caused wheat prices to rise significantly. If you look at other commodities like barley and sugar as well, prices have continued to rise given what the backdrop of the Russia-Ukraine crisis. So with the added impact of FX challenges, in trying to import these materials, they'll continue. I think they'll continue to see cost constraints, which would impact their margins and their bottom line. In terms of the HPC segment, we've seen a lot of growth for the segment, especially as economic activities have resumed and a lot of people have been out and about. There's a lot of emphasis being placed on personal and home care still. In terms of the brewers, they, like you said earlier, had been fine to the bank in the H1 period, but there's the problem of top line and bottom line sustainability for the second half of the year. If we consider the fact that there's an excise duty increase that has been implemented at the second half of the year, which is the 1st of June, added to the fact that there's also the carbonated tax that was implemented at the beginning of the year that is going to affect their malt segments and the like. I'm not sure that we would see sustained performance for the second half of the year, especially as volumes have started to decline slightly with the increased pricing that we've seen so far. So for the brewers, the outlook is not as strong as we had seen in the first year. For the food players as well, given that they've been able to focus more on value products. We may see volumes sustained for them, and with stable pricing, we should see them still coast at the end of the year. But for the sugar players as well, I think we should still see decent margins, especially as sugar prices are starting to show a slight decline internationally. That's raw sugar prices. So overall, I think it will be a mixed bag. I think the sectors to watch would really be the food players, given what I mentioned earlier. For the brewers, I think the jury is still out to see how they'll be able to sustain their top line and bottom line for the second half of the year.
All right. Well, we'll keep watching those stocks. But now, what are you seeing for consumers, for the rest of the year? Do you see more pain ahead?
Well, the pressure points still remain. For example, the impact of rising global inflation on commodity prices still remains. The fact that we still have to import, or players still have to import a lot of their inputs still remains. The FX challenge still remains, and that would filter into food prices and energy prices as well. So in terms of the consumer wallet, we should still see inflation affecting them. significantly. For August, inflation target or inflation projection is about 10.63%, and this may continue to get to grow or to compound as we go into the end of the year, given what is happening. But will depend on what is happening, internationally with the crisis in Russia, between Russia and Ukraine, and with the FX liquidity constraints.
All right, Chima. Well, I guess we all need some kind of break at some point this year. Thank you so much, Chima Okwadike, Senior Consumer Goods Analyst at Vetiva Capital. It was great having you.
Thank you.